It's easy to think of debt as a simple exchange. Borrow money now, pay it back later. But what if the small loan you're considering is far more costly than you expect? Many people fall into this trap, believing that taking out a small loan for an urgent purchase or a short-term fix is harmless. But the reality is often more complicated, and in some cases, that small loan ends up costing far more than what you initially borrowed. At first glance, small loans appear to be manageable. A few hundred or even a few $1,000s can seem like a reasonable amount to repay over time. But the problem begins when you factor in the interest rates and hidden fees. Lenders may offer you a low monthly payment to make the loan appear affordable. But when you look at the bigger picture, you'll realize the total cost of the loan is much higher than you expected. This is the math of debt. Many loans come with high interest rates, especially if you're borrowing from a payday lender or using credit cards to cover short-term expenses. Even a loan with an interest rate of 10% to 20% can add up quickly. If you borrow $1,000 at 15% interest for a year, that's an extra $150. This may seem manageable at first, but the numbers quickly escalate if you need more time to pay off the debt. But what if you miss a payment? That's where it gets even more expensive. Lenders often charge late fees, and some may increase the interest rate if you miss a payment, making it even harder to catch up. This is how small loans quickly snowball, making it feel like you'll never escape the debt trap. The next step is to zoom out and look at the systemic effects of debt. The debt cycle can make it harder to save money, invest in your future, or even make purchases that will help you build long-term wealth. The more debt you carry, the harder it is to break free. If you're constantly juggling small loans, you'll find it harder to make financial progress. Instead of building savings or investing in assets, you'll be stuck making loan payments, and your wealth will only decrease over time. It's important to recognize that the way you approach debt directly impacts your financial future. When you take out a loan, even a small one, you're not just borrowing money. You're taking on an obligation that could limit your financial freedom for years to come. By understanding the true cost of debt, you can start making smarter financial decisions that will save you money in the long run. So, the next time you're considering a small loan, stop and think about the math. Consider the long-term consequences, the interest rates, the hidden fees, and how this loan might affect your finances years down the road. Sometimes, it's better to wait and save for what you need than to take on debt that could cost you far more than you expect. Debt may seem like a quick fix, but the cost of borrowing can add up. Taking the time to truly understand the math behind debt can help you make smarter, more informed choices about your financial future.